Good morning. I would like to welcome you to Klaipedos nafta meeting with investors. I'm Emilia, an account manager at Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. The agenda couldn't be simpler. We start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage every one of you to ask questions during or after the presentation in the question box of your screen. With that said, I am pleased to introduce today's presenters, the Chief Executive Officer, Darius Šilenskis, and the Chief Financial Officer, Jonas Lenkšas. Gentlemen, please, the floor is yours.
And good morning for everybody who is participating. So as usually, we are here to present our quarterly performance for the 2020 Q1, 2021 first quarter. Challenging year, but still we would like to describe how it's going for our company. So the content of our presentation includes information about our mission and vision, reflection on how we are dealing with COVID-19 related challenges, main highlights of first quarter 2021, and we will briefly present financial performance and results of the KN Group for the first quarter of 2021. So far, no changes or shifts in our mission and vision, but here I think is a right time to say that company with governing bodies together have initiated the revision of a strategy by reacting to the market challenges which we are facing right now, and by reacting to let's say loss of one of the key flows to one of our terminals, the Klaipedos oil terminal. But still our mission remains to ensure safe, reliable and efficient access to global LNG markets, and by sustainable development, investment and operation of multifunctional terminals worldwide. It's worth to mention that we are operating right now 5 of them. One is located in Port of Açu in Brazil. Our aim is to assist our customers on cleaner energy transition and to maintain their competitiveness. And our vision is to become top LNG terminals operator worldwide and the most competitive oil and refined products handling hub in the Baltic region. Talking about the COVID, in general, we managed successfully and continuing managing of business continuity in all our terminals and all our activities. So no breaches of any contracts. All the contractual commitments against the clients are fulfilled from both sides actually, and we have proper commitments from our customer side. I'm glad to say that as of today, we have majority of the employees vaccinated, at least with the first dose of vaccine against COVID-19. We've been included by state regulation into let's say group of the companies which can make it a bit faster, because we are performing or providing strategic function in terms of energy security and in terms of diversity of oil product supply into Lithuania and into region. What else? We are still maintaining hybrid model of our work regime, so to say. Part of the staff is still working remotely, and of course those who are needed in our oil terminal operations, they are performing their duties at site. Of course, it's worth to mention that result of 2020 and the first quarter of 2021 has been impacted by COVID-19 negatively. Why? Because of continuing, let's say, restrictions on the mobility, which means, let's say, reduced demand and consumption of oil products, and as a consequence, lower refining margins, which show some signals of recovery, but so far, world is quite restricted in regards to traveling because of continuing pandemics. Talking about main highlights, so here I would like maybe to underline a few of them. So on April 7th, we announced that government of the Republic of Lithuania adopted a resolution which provides that LNG operators shall calculate the share of profits to be paid for dividends for the period from 2020 to 2024 by eliminating unrealized impact of changes in foreign currency exchange rates and other amounts of unrealized gains. Why it is important? It is important because we have quite a big effect of FX, and we have security supplement reduction in place, which creates, let's say, huge volatility into our financial reports. So this government amendment of a government resolution, let's say, allows us to simplify the reporting by eliminating all non-cash items related with FX and IFRS standard, let's say, regulation. Another important milestone is that we started consultation with market participants on our biggest project, which we are implementing right now regarding the purchase of floating storage and regasification unit. This is, let's say, the beginning of a public procurement process, and it's really important milestone. Another thing which is actually in line with our strategic goal in the regulated LNG activities to achieve by 2030 at least 30% of revenues for our, let's say, FSRU terminal operations from international partners. So what we need for that, we need to be competitive. Lithuania is getting another access to another big market of natural gas from the end of 2021, when GIPL connection from Lithuania to Poland will be opened. So it's important to analyze how we can use our infrastructure in Klaipėda for higher capacity utilization by using additional demand in actually Poland or Finest-Lat format, including Finland, Estonia, and Latvia. And of course, another important milestone, not a milestone, maybe decision of a court, maybe it's not a milestone, but it's, let's say, a win that European Court of Justice has adopted the decision by the state aid, and it's declared compatible with the internal market of European Union. So later today, we will hold a general meeting of the shareholders where very important decisions will be taken. Approval of audited financial statements and preparation of a profit loss for the year 2020. So talking about other, let's say, highlights, which is worth to mention, on January we renewed a whistleblowing reporting channel, so-called Speak Up channel, which is important tool for prevention of violations and transparency of all our activities. And it's worth to say that KN is the first among Lithuanian SOEs or state-controlled companies where Speak Up channel will be supervised by, let's say, audit and collegial supervisory bodies. Another thing to say is that I'm really proud that we are continuing implementation of the lean project in a company. We already implemented 3 lean methods, which are really giving contribution and allowing to protect us, to protect our let's say profit or bottom line. So we are continuing this project. It really shows returns. It shows efficiency and productivity improvements. So and of course we managed to get into top 10 list of let's say investor relations, best investor relations companies in the Baltic market. So happy to hear that, despite of the challenges which we are facing. we are still, let's say, maintaining the benchmark in this area. So, Jonas, I will give you, now it's your time to present shortly financial results. Thanks.
Thank you, Darius, and good morning, everyone. I will comment shortly on our group financial results. And in the first quarter, the group earned 15.7 million euros of revenues and closed the quarter with 9.1 million euro of net loss. And in terms of adjusted net profit, it was 35,000 euros. So for the first quarter of this year, net loss is determined by negative impact from foreign exchange rate, which amounted to 12.9 million euros. In terms of turnover, as we can see, it is lower than in any of the quarters in the previous year. During the first quarter of the year, group has experienced lower oil products transshipment and lower regasification volumes that determined lower revenues from both oil terminals activities and regulated activity. This in turn also affected adjusted net profit result, which in the first quarter of this year is much worse than in the first quarter of previous year. As we can see, net profit is fluctuating substantially, which is mainly caused by the currency exchange rate influence, which is emerging due to IFRS 16 application starting from beginning of 2019, as our lease payments for FSRU are denominated in US dollars. Therefore, we are focusing to adjusted net profit result while evaluating the result of the group. So in the first quarter, we see opposite situation with foreign exchange rate differently than in last quarter, quarter 4 of 2020. So in the first quarter of this year, US dollar appreciated against euro and brought a negative impact to our result. And just to remind for those who maybe are joining us for the first time, as currency exchange rate influence is coming from financial lease liabilities is not realized by the group and will not be realized in the future because it is related to regulated activity and costs are compensated at an actual exchange rate. The group, in order to present real and comparable result of the activity, is calculating alternative performance measures like adjusted net profit, which is provided in this slide. And calculating adjusted net profit, the group eliminates unrealized impact of foreign currency exchange rate, the deferred income tax impact, which is related to the same foreign currency exchange rate, and unrealized impact of financial derivatives transactions. So going to the next slide, in this slide we can see the split of the result between our business lines and comparison between IFRS-based and adjusted results. So there's no changes from the previous period in the business segments. We group our activity in 3 of them: oil terminals, regulated LNG activity, and commercial LNG activity. And as oil terminals were affected by the halt of products flow from Belarus, we see now regulated activity segment having substantially higher revenues and EBITDA number. And in terms of IFRS-based net profit, regulated activities result is affected by negative impact of foreign exchange rate. And from the split between IFRS-based and adjusted result, we can see that all our differences experienced in regulated activity. Commercial LNG activities result is still in negative zone, but very close to positive one. And as will be seen from the next slides, the result in Q1 of this year is substantially better than in Q1 2020. And now I will give the word back to Darius
Yeah, so let's take some round about each of our business segments. So here you can see performance of our oil segment, and as I already mentioned at the beginning, let's say this segment was impacted the most because we had a multiplication of both COVID-19 affected the fundamental macroeconomical, let's say, changes, and we also had, let's say, a cease or suspension of Belarusian cargos, which was previously quite a common activity in our Klaipedos oil terminal. Nevertheless, in Q1, demand for light petroleum products kept a slow pace upwards, showing some signals of refining margin recovery. Nevertheless, that wasn't yet enough for refineries to increase their refining capacities during Q1. And the main factors summarizing that had the greatest impact in Q1 result, which as you can see is negative. So the increase of vacant tanks, intensified competition in oil product storage, especially that hit the market. I would like just to remind that when pandemics hit the world, and there was a huge contango, so almost all storage capacities around the Baltic region has been fully occupied by long-term storage products. We've also gained from that during 2020, gained quite a significant amount of revenues from storage activities. And now those, let's say, long-term storage volumes are coming back into the market, so the competition is intensifying in this segment. I already mentioned about restrictions on mobility in European countries, so pandemic continued to affect volumes of oil products handled in our Klaipedos oil terminal during first quarter. I already mentioned about BNK limited suspension of oil product supply. The political reasons due to many political reasons actually. And we don't have any requests from this customer starting February 2021. So we put a lot of efforts to substitute loss of Belarusian volumes, and we offered to, probably I would be right by saying, to all let's say major market players in our region to offer available tanks and other services and products, and we were quite successful on part of our spare capacities, which were rented for light product storage, and we have some improvement on import, blending and handling of biofuels in our Klaipedos oil terminal. And also we have extended our cooperation in a field of biofuels handling during 2021, and rented as well some additional tanks for ethanol storage. Also, it's worth to mention that we signed a contract on RME, simply saying it's a bio component in a diesel, which is obligatory in accordance to European regulation. We have needed infrastructure for blending of it, and we have additional demand which will materialize starting from May. So what also can be said, where we've been successful by defending, let's say, loss or mitigating loss of Belarusian cargoes, and reduced, let's say, amount of transshipped cargoes from Lithuanian refineries. So we replaced partially it with higher feedstock import flows for local refiners. So this is shortly about oil. Talking about LNG, or let's say regulated LNG activities, Q1 result was worse comparing to Q1 2020, which I would like to remind was a record year in terms of regas, let's say, capacities. In Q1, we had 4 large-scale and 11 small-scale cargos delivered to our FSRU for further regasification. And average utilization of Klaipėda LNG terminal during Q1 reached 39%. For example, last year's average capacity utilization was about 50%. What was a reason? Probably the main reason was suddenly opened arbitrage opportunities in Asian markets, where why some of the cargos has been diverted to those markets instead of reaching Europe. Nevertheless, March data is showing that more LNG cargos are coming back to Europe. It also may be worth to mention, which is not maybe stated here, that majority of LNG supply during Q1 was United States origin. About the natural gas consumption, in Q1 2021, it has increased by 28%, and mainly due to a cold winter. So imports from LNG terminal, our operated LNG terminal in Klaipėda, amounted for 44% of entire supply. So index, TTF natural gas index, the average value was 18.1 euros per megawatt hour in comparison to 11.6 in Q1 2020. So you can see quite a significant difference on natural gas price comparing the same period for previous years, Q1. Talking about our commercial LNG activities, we've generated the 1.3 million of revenues. That was about 30% more comparing to the last year's first quarter result, and respectively EBITDA was 408,000 euros. We are still on a very minor negative zone in regards to our net profit adjusted, but I strongly believe that this year will be the turning point for our commercial activities on LNG. It's worth to mention, maybe there are somebody who joined first time. So as already mentioned, we're operating 5 terminals. In 2 of them is oil terminals, both located in Lithuania, and 3 of them are LNG. And one of those terminals is located in port of Açu, Brazil. So we are providing operations and management services for supplying, let's say, for operating the regasification process and infrastructure from FSRU to the power plant on shore. We also have a 5-year agreement in place with the biggest Polish SOE, PGNG, regarding the use of LNG reloading station, so-called small-scale terminal. And at the beginning of April, we received the 5th cargo of LNG at Klaipėda small-scale LNG terminal. And of course, we are continuing looking for another alternatives, another projects worldwide. We are, I would say, quite successful. We are, let's say, checking almost all opportunities in the market, and we are now focusing more on, if to look into the globe or into the map, mainly opportunities which are in Europe, Southeast Asia, Middle East, and South America, and of course, which, let's say, meets our, let's say, risk appetite and other criteria set by our strategy. So here, Jonas, I will give microphone back to you.
Yes, I will comment shortly on our main profitability and market value ratios, which here are provided based on adjusted figures. And maybe it's worth to comment on our EBITDA margin, as we can see significant increase starting from 2019, and which is a result of IFRS 16 application, as lease payments earlier being recognized in operating expenses now are recorded as depreciation, and this change resulted in increase of EBITDA number. And EBITDA margin is lower for Q1 2020 as a result of security supplement reduction. And for Q1 2021, we see even lower EBITDA margin, which is due to lower transshipment and regasification volumes, which resulted in lower revenues and subsequently lower EBITDA. And for our gross profit margin for Q1 2021 compared to corresponding period of 2020 is the same reason of lower transshipment and regasification volume. And going next, some comments on our balance sheet. So no major changes in the structure of the asset and liabilities. After the application of IFRS 16, the major portion of the assets consist of right to lease property and property, plant and equipment, and decrease of both items is due to calculated depreciation. Right to lease property consists of FSRU Independence lease liability till 2024 and the purchase option of FSRU. And the main components of current assets are bank deposits in amount of 24 million euros, inventories 2.2 million euros, and guarantees 1.4 million euros. On the liabilities and equity side, the biggest portion are lease liabilities of the same items, FSRU lease till 2024 and purchase option of FSRU. And on the liability side, we see increase in non-current and current lease liabilities, decrease in equity, and increase in loans. Non-current and current lease liabilities increased as euro depreciated against US dollar, and our lease liabilities are calculated at each reporting date at the exchange rate on that date. Equity decreased due to net loss of the Q1 of this year, which was determined by negative foreign exchange rate impact in amount of 12.9 million euros. And loans balance has increased as the group uses NIB loan to finance reduction of security supplement, and new tranche has been drawn as planned. So now we'll come to Q&A part.
Yep.
Thank you very much for the comprehensive presentation. As you have said, now we will proceed with the questions. But before that, I would like to remind all the attendees that you can send in your questions in your question box of your screen. So let's proceed. The first question is related to the updated dividends calculation. The question is, where reserves of profit will be used and how management sees next 12-24 months? Thank you.
Yeah, thank you for a very good question. Actually, reserves of the profit are the purpose of it is implementation of our strategic goals. And as we've been presenting previously, and you of course can find our strategy available both in our website and probably in the NASDAQ platform. Let's say the purpose of our reserves is to invest into global energy development mainly. But of course, complexity and uncertainty in the market which exists right now gives some worries for us. And as I said, we are now in process of strategy revision, where we will, define finally whether our strategic goals previously was right ones or still actual ones. And then, of course, one of the strategic questions for us is about actually reserves of profit, which we have. So this is the answer shortly. And yeah, there was another part of a question how management sees next 12 to 24 months. No? Yeah. And next 12, 24 months, as already briefly mentioned during the presentation of oil segment performance, we see that recovery, at least in oil segment, potentially can start even second half of 2021. Of course, all depends on how the world will finally end with the pandemics, whether we will come back to previous good normal, let's say, living, where we can travel, where we can move, where we can meet. And I think we will, within a year, we must recover on that. Talking about the natural gas or LNG segment, actually, both consumption and production of it is increasing stably. I'm not ready now to comment the exact percentage. It's few percent growth. So this segment is doing well, and actually from all energy segments, the LNG segment worldwide was hit at the least or impacted the least due to pandemics. 24 months, yeah, quite, maybe it's a bit longer period, so it's hard to comment. I think once we will have, let's say, the updated strategy, I will be more ready to comment on this. Thank you.
Thank you very much for your answer. Another question is as follows. What are the main challenges for long-term growth? Thank you.
Yeah, probably the long-term growth main challenge is to be in the line with the changing world. I'm talking about, let's say, sustainability and, let's say, emission neutral world. So in a very long perspective, definitely our company must find another, let's say, business leg, so to say, a business segment, which is more sustainable, which fits into the global agenda on a climate neutral future. And it's worth to mention that we now assigned a team within our company, not even now, it's already the second year in a row, and we are investigating opportunities to include into our, let's say, businesses some of the, let's say, greener and more sustainable activities. So for now, we are considering various options, including hydrogen, including carbon capture, storage, utilization, including biogases, including our, let's say, renewable fuels, expansion of renewable fuels activities, etc., etc., etc. So this is probably the vision where we will land after we will finalize our strategy. We will see closer to the end of this year.
Thank you very much for your answer. We have received one more question, which is as follows. What might be the impact on Klaipedos nafta LNG terminal of increased exit tariffs from Lithuania to Latvia in Kiemene interconnection point? Thank you.
Yeah, so many factors, thank you for the question, many factors can influence actually our activity. It's worth to mention that our, let's say, regional or Klaipėda FSRU activity is regulated activity. So, and our, let's say, place in the supply chain is only regasification and operation of related infrastructure in Klaipėda port. But, you know, all depends not only on the tariffs, but also on the spread, on the pricing, on the demand, on the spread between summer and winter, etc., etc. So it's hard to comment. But of course, we must remain competitive, and the tariffs, including transit tariffs, must be competitive for us to continue, or let's say for the gas which is regassed in our infrastructure to reach the Kiemene interconnection point. But I think this question, probably we are not the best addressee of it. We should also have our TSO representatives or regulator representatives to answer properly.
Thank you very much for your answer. We have just received one more question, which is as follows. Do you foresee any impact on Klaipedos nafta business of US sanctions on Belarusian companies? Thank you.
I think we already suffered let's say, the toughest impact, even without the sanctions. So I don't see any changes from present situation, whether it will appear or not. So because anyway, we don't have any Belarusian ton starting 1st of February, and we are switching to another business models. We are looking into another markets. We are entering storage or long-term storage business, and looking for alternatives. Thank you.
Thank you very much for your answer. As all the questions were answered, on behalf of NASDAQ Vilnius, thank you everyone. It was my pleasure being with you today. Recording of the presentation will be available in the NASDAQ YouTube channel. Thank you for the presentation and a very interesting Q&A session. Have a good day, everyone. Goodbye.
Thank you, Emilia, and all the participants. Have a good day and stay healthy. Bye.